Hey guys, welcome back. You're still tuned into Trading Hour on CNBC TV 18. A lot of the consumer names are in focus. We have been getting the updates. So we have Abneesh Roy joining us now. He's Executive Director at Nuvama Institutional Equities and joins us to discuss all of these individual names. Abneesh, good morning and thanks a lot for joining us. This is Pavitra. I want to begin by asking you about Titan. You know, they've clocked in very good growth. It's also coming off on quite a high base. Their new businesses are doing well. The entire jewelry segment looks like it's really shining. Do you think this kind of growth rate is sustainable? Of course, you know, we are coming off the festive season as well. But do you think that this kind of growth rate is sustainable?
Yeah, thanks. In case of Titan, yes, last 2 years has been extremely good. So Titan does face higher base issue definitely. But yes, we are seeing a strong marriage season as we speak. So partly it should address the high base issue. But one more thing which is slightly on the challenging side is now big fat weddings are back. So whenever we see that happening, the consumer spend on the jewelry does take a back seat. So that is also a slight issue, but that's for the sector. Titan, of course, market share expansion will continue. They have a very focused strategy on the marriage demand and also on the South India. So I would say that Titan should still do better than the industry. But yes, high base and big fat weddings back. I think that's a challenge in the coming quarters.
But isn't it supposed to be good for Titan? If big fat weddings are back, then people buy more jewelry, right?
No, so how it worked? It's a good question. How it?
Okay, well,
I think he probably means that, you know, people are spending so much on the weddings. Maybe they're holding back on jewelry spend, but you would expect this
I thought the first expense you make before you plan your wedding is buy your jewelry.
Yeah.
You know, at least that used to be the case way back in the day.
Okay, I think he's back, so let's hear it out from him. Abneesh, go ahead.
Yeah, so definitely in the base, also the spend on the jewelry is there. But now going ahead, people are spending more on the event. So that shift from jewelry to events and experience within the marriage, I think that is what is going to happen. So that is the challenge which all jewelry companies will face in the coming quarters.
Okay, I guess people after COVID as well have gotten used to the minimalistic way of life, right?
Yeah.
People don't want to go all out. They may spend a certain amount, but I guess weddings have also become more expenditure, but lesser number of people, more sort of quieter weddings.
Intimate.
So maybe that's what, intimate weddings, maybe that's what Abneesh is referring to. But Abneesh, what are your thoughts on Godrej Consumer? Because, you know, we had a chat with the management a while back, and they indicated to us that despite all the challenges, the margins, gross margins will see an expansion at least for the next 4 to 5 quarters. How are you feeling about this stock?
Yeah, definitely we are quite positive, and Godrej Consumer is there within our model consumer portfolio with 20% weightage. So this is the first quarter when the results are visible in terms of the efforts which the new MD took. So this is one more data point that consumer companies will retain gross margin, will retain EBITDA margin in the deflationary scenario. First, we saw that in the tea companies, we saw the numbers for Tata Consumer in the earlier quarters and even Hindustan Unilever's beverage portfolio. Then we saw Marico's gross margins improve because Copra went down. And then now we are seeing that definitely GCPL also is seeing expansion in the margins. So I would say that yes, we will see further acceleration for GCPL and HUL also from Q4 in terms of margins.
Can you tell us what we should expect on the rural front? What were the trends that you picked up?
So rural continues to remain quite challenging. It is a base effect which is benefiting, but structural recovery for FMCG, I think even in Q4, we are not picking up. So Q3 definitely remains quite challenging. My sense is this will happen in FY24 only, and this will be based on deflation which farmers sees in the diesel, fertilizer and general inflation. Till then, in Q4, it is still a hope rather than any recovery which has happened. NREGS data in terms of job at the lowest end, there are some positive signals, but still I don't think we have a very strong trend there. So still challenging, I would say, in terms of rural.
Okay, rural is still challenging. In fact, this is what we were speaking about when Dabur's, update came through as well, because they do have higher exposure to the rural area. They're factoring in sort of a margin contraction of 200 to 250 basis points as well this time. But Abneesh, quickly, if you could run us through your, top picks in the sector, what do you think is better positioned?
Sure. So we have Hindustan Unilever, Britannia, Godrej Consumer and Nestle among our topics. We also like ITC, but we'll wait for the February 1st there. So definitely these are the 4 companies where the gross margin expansion in the FY24 will be on the higher side. Plus, they will have a higher volume growth than the overall sector average. They are definitely aggressive in terms of the new launches, and on the rural also, whenever the recovery happens, HUL, Britannia, etc., will have a higher share because of the market share gains also. So these four companies are where we are overweight. We'll be underweight on someone like a Imami or say even United Spirits. Those are the companies where still the challenges are there.
Okay. Any thoughts on Asian Paints? There's a big capex plan that they've announced, over 2,000 crores, and I'm guessing they're expecting demand to pick up in a big way. Hence, they're putting up this new capacity. Would you buy it at this price?
Yes, we are positive on Asian Paints. In Q3, October demand was quite weak for the sector, which has recovered in November and December to a great extent. I think Q4 should be reasonably good. Of course, high base is there for paint companies also. But when I refer to the marriage demand, I think Asian Paints is going to get more benefit than say the jewelry companies, because here again, because big fat weddings are back, there is more travel, etc. People would want their homes to look better. And of course, from a raw material side, titanium dioxide and crude related input, Asian Paints will continue to see benefit in Q4 also and FY24 also. So we are quite positive.
Thank you very much, Abneesh, for joining in. Need to slip into a very short break. On the other side, we'll discuss market technicals. Kush Bora of kushbora.com joins the next.